Hi, I'm Doug Jones with Doug Knows Real Estate, and I want to talk to you about capital gain a little bit. When I'm talking to a customer who's selling a house, I always talk to them about their capital gain. Now, I'm not a CPA and I'm not a tax attorney, but I give them an idea and I tell them where to go and where to look and to talk to their tax people to make sure they understand they're not going to get all the cash from the sale. There's going to be taxes on it. There's going to be a capital gains tax. And it's not required to be on a net sheet. Realtors aren't required to do that. But I think it's wise, especially when people are going to buy another home pretty much immediately. They need to know exactly how much cash they're really going to have. And I've got on the board here a real tax dollars from somebody's taxes several years ago. And what I want to show you is this. This was a single person who sold the house for $1,000,001. Now this number is adjusted. The CPA will adjust according to fees. Okay, so that's an adjusted number of $1,000,001, and they purchased the house. The person purchased the house for $308,764. So the gain from $1,000,001 to 308 is $791,236. But the person is not required under federal taxes to pay taxes on all that, because they get a $250,000 exemption, $250,000 exemption. Married couples get a $500,000 exemption. So in this case, after the exemption, the taxable amount is $541,236, and the actual tax dollars on the $541,236 is $75,000, $75,683. Now that's a lot of money, $75,683 coming out all at once. But remember, they're getting the difference. They're getting other monies here, a lot of other monies. In California, the state tax is more than this. But when we do loans, we don't require state taxes. So I don't know how much the person paid in state taxes. What's interesting though is this: is over 25 years or 300 months, this gain was $791,000, $791,236. Well, if you divide that by 300, that means this person actually was earning income of $2,637 every month over the last 300 months. And then the taxes, this amount of tax over 300 months is only $252 a month. So if you look at it a different way, you look at it in timeline and how much is it per month, how much am I gaining, how much am I paying taxes per month, this person's actually getting $2,385 per month for 25 years. And that would come to what, about $26,000 a year. That's a lot of money. So anyway, what I'm going to say is that it's not required that a realtor give you a net sheet when they do a net sheet for your sale. It is really recommended that you understand that you're going to have a capital gain and that you do talk to a CPA right away. You actually probably want to do that before you sell. So that's what I recommend. And I hope that's some good advice for you. I'm Doug at Doug Knows Real Estate, and hit the subscribe button.